All right, welcome to our top tickers briefing. Today, we're digging into the Q3 earnings call for Intrusion Inc. Now, this company is showing some really strong signs of a turnaround. But, and there's always a but, right? The numbers show this classic tug of war between spending money to grow and actually making a profit. So, let's dive right in.
Okay, so the first thing that jumps out at you is this number right here, 31%. That's their year-over-year revenue growth. And look, this isn't just some lucky one-time thing. This is actually their sixth consecutive quarter of top-line growth. That tells you they're executing consistently, and that demand is definitely there. But, that's just scratching the surface. So, let's pull back the curtain and look at the actual results for Q3. And really, this subtitle says it all. Growth continues, but profitability remains elusive. You've got this great story on one side, but the other side, well, that's where things get tricky.
All right, let's get into the nitty-gritty. So, you see revenue hit $2 million. That's the 31% growth we were just talking about. And a big chunk of that came from expanding a deal with the Department of Defense. Gross margin? Super healthy, holding strong at 77%. But then you look at the net loss. It's flat, stuck at $2.1 million, same as last year. And this last number is the one everyone's watching, their liquidity. They've got $7.5 million in cash and short-term investments.
And this slide really just lays it all out, doesn't it? It's the whole story in two columns. On the one hand, you've got this awesome, consistent growth, 6 quarters in a row. You can't argue with that. But on the other hand, they're still burning through cash at the same rate. So management is clearly pouring fuel on the fire to grow, but the big question from the market is, okay, great, but when are you going to be profitable?
So the natural next question is, how are they going to fix this? How do they get from growth to profit? Well, management laid out a pretty clear 3-part strategy that they're betting on. Let's walk through each one of these pillars.
Okay, pillar number 1, and this one is a big deal, operational technology, or OT. Now, as the CEO, Tony Scott, says right here, this is probably the single biggest underinvested area in all of cybersecurity. We're not talking about protecting your email. We're talking about protecting physical stuff, power grids, factories, things that can't go down. And their existing work with the DoD gives them massive credibility here, a real foothold to go after some huge contracts.
Pillar number 2 is all about the cloud. They've already launched their Shield cloud product on the AWS Marketplace, and they've got Microsoft's Azure coming up fast. Now, why does this matter? Because it makes it incredibly easy for companies, especially small and medium-sized businesses, to buy and use their stuff. You just click a button. It removes all the friction from the sales process, and that is absolutely essential if you want to scale up your revenue quickly.
And the third pillar is a really smart partnership they have with a company called PortNexus. Basically, PortNexus has this platform called MyFlare that's used by schools and police departments, and Intrusion provides the endpoint security for it, protecting all the laptops and devices. But the really amazing part, according to the CEO, is how fast they can sell this thing. He said the sales cycle is remarkably short. They show it to a school administrator, and they basically want it on the spot. That's a recipe for repeatable, fast revenue.
Okay, so that's what management wanted to tell us. But for my money, the most interesting part of any earnings call is the Q&A session. This is where you get to read between the lines and see what investors are really thinking about, what they're really worried about, and what the hidden opportunities might be.
And the questions from the analysts were spot on. First, they asked about scalability. Basically, if Intrusion lands a huge OT deal, do they have to go on a massive spending spree to support it? Management said no, they can handle it. Second, the cash runway. They confirmed that $7.5 million will fund them into early 2026, but then you get to the really juicy stuff. The CEO was asked point blank if he thinks the company's intellectual property is worth multiples of the current stock price. His answer? A simple yes. Then he was asked if their products would be a good fit inside a bigger cybersecurity company. Again, a simple yes. Folks, those are not throwaway comments. That's called signaling.
All right, so we've looked at the numbers, we've heard the strategy, and we've listened to the signals in the Q&A. Now it's time to put it all together and figure out what it means for the stock going forward. This is our call.
So here it is. Our rating on Intrusion is outperform. And here's why. You've got that consistent top-line growth. You've got a smart strategy focused on that huge untapped OT market. And maybe most importantly, you've got those not-so-subtle hints about the value of their IP and their potential as an acquisition target. When you add all that up, the risk-reward profile just looks really compelling to us.
And that brings us to the next call, our take on what could happen next. And we think the real play here is M&A speculation. The thesis is pretty simple. Intrusion's unique technology, especially in that critical OT space, makes it a prime takeover target for a bigger player. So what's the catalyst we're watching for? It's a major contract announcement in the OT space.
That one event would prove to the whole market that their tech is the real deal. So the trade? Well, it would be to get in a long position to ride the wave of M&A chatter that would almost certainly follow that kind of news. And of course, this is not financial advice.